Trading is a skill that needs to be learned. If I, as a person, is to start trading again, or I am a beginner, or I am starting afresh in the trading industry, whether forex, cryptocurrency, derivative, even stock. These strategies that I'm about to reveal to you in this video is how I will get started and use them to grow a small account. My name is Juliet, and in this space we share money secrets that the minority know. They apply these secrets and they are getting results. So we reveal these secrets to the majority that they will apply it and come out of the circle of being broke, start building real wealth, and see results with their money. If this is the kind of vibe that you want, smash that subscribe button, hit the notification bell so that you get notified anytime I publish a valuable content like this. Like this video. Let's dive in. 5 proven strategies that can help you grow that your small account as fast as possible and make you stay profitable as a trader. The first strategy is quality over quantity. Many traders believe or think that taking a lot of trade means making a lot of profit. But in reality, the answer is no. It doesn't work like that in reality. Let me break it down for you. More trades is not more money. I was a victim of this when I was starting in trading industry. Sometimes I take like 10 trades. Sometimes I take like 7 trades, 5 trades, at minimum 3 a day. But let me tell you what happens when you do this. For every trade you take, there is an inherent charge. Whether you lose the trade or you win the trade, you are paying charges. I explained these hidden charges in one of my videos. I will drop the link in the description. You go and watch that video. So before you take any trade, the moment you click that buy or sell, there is a charge attached to it. So whether you lose the trade or you gain the trade, you will first pay that charge. Secondly, trading all the sessions and increasing the number of trades that you take per day will not increase your money. It exposes you to a lot of risk. Sometimes, if you are using this method, you will think that you are actually making money. Maybe you take like 10 trades in a day and you win 5, lose 5. And at the end of the day, you discover that you are not really growing. I just explained one of the reasons why you are not growing. Remember, you lose some of the trades and you win some. And to the ones that you lose, you already paid charges for the ones that you lose. And the ones you win, what is the risk to reward? Taking too much trades might make you not to be taking a quality setup. Remember, we are talking about quality over quantity. Let's say that you have $50 account and you risk $5 of that account in each trade or per trade, which is 10% of your account, which is 10% of your account size, and you take like 5 random trades in one day with the risk to reward of 1:1. Being optimistic, you know that it is almost impossible for you to win that 5 trades. So let's say that you win 50% of that trade. You are still in negative. As we want to be real, being optimistic, let's say that you win 50% of the trades and you lose 50%. You think you are winning or you are on the winning side, but I tell you that you are still on the negative because of spread. I mentioned it earlier, hidden charges. Because of spreads and commissions. For the trades that you lose, you paid spread, the charges were taken. And for the ones that you lose, you win, the charges were also taken. So the end result is this: you keep losing money. You will eventually blow that account in a few days if you are not careful. I like being real. This is it. Again, while you are trying to stay profit as while over trading, you will start changing strategies. This strategy is not working. Let me try this strategy. This strategy is not working. Let me try the other strategy. The truth is this: nothing changes if nothing changes. Or let me put it this way: nothing changes until you change. A simple change is just what will solve the problem. You change by stop to take random trade. So look for quality setup. Avoid random trades. Stop changing strategies as if you are changing your undies. Pick one strategy, backtest it, journalize what you are doing or journalize your trade. Allow that trade, that strategy, master that strategy. Be patient with it and master it so that you see how it works. When you adopt a particular strategy and master it, you will discover that the strategy will start working for you. Do this with that your small account, or to stop struggling and start staying profitable. Don't take random trade. Start taking quality trades, A plus setups. A clear, clean, and a high probability trade will help you. And this type of trade, you don't see it every day. I will be as realistic as ever. You don't see quality setups on daily basis, except you have the strength at least to analyze up to, let's say, like 30 pairs, if possible, in a day. I don't know where that strength can come from. So quality setups with clear proven strategies are not something you see morning, afternoon, and night. Maybe you see it in London session, Asian session, you see it in New York session. No. So take quality trades, A setups, a clean, clear, and high probability trade. It follows a proven pattern with multiple confirmations. This will change your entire approach. Before you take a random trade again, ask yourself these questions. If I have a $50,000 account, will I take this trade? If the answer is no, then don't take the trade. But if the answer is yes, go ahead, take the trade. Let this be a watchdog over the trade that you want to take. If you change your entire approach, your results will change. And that's when you will start seeing your money to compound, because by so doing, by then you will start being consistent in your results. Stop gambling and start focusing on one good trade at a time. If you take one good trade, one quality trade, one a day, it is more better and can help you grow accounts if you can be consistent, compared to when you take 5 random, 10 random trades that didn't give you anything at the end of the day. Strategy number 2, focus on risk to reward, not lot size. Initially, when I came into trading newly, years back, I used to think that if I want to make more money, I have to increase the lot size I want to use to trade. I never realized that increasing my lot size is exposing me to the bigger risk of blowing accounts. Because when you keep increasing, or when you trade with a big lot size, a little movement, a slight movement will just blow that account, because it is a small account. So trading with big lot size doesn't make you a good trader, and it doesn't also make you more money. It exposes you to bigger risk. Now, let me tell you what this thing does for you. When you trade with bigger lot size or big lot size, when the trade is going in your favor, it's always sweet. but one bad trade will just wipe that account. Remember, in this industry, for you to last long, your discipline is your edge, and protection of your capital is number one. Let me say this. If your success as a trader is or depends on luck, you are not trading. You are just gambling. I want to do a comparison between trader A and trader B. Trader A is a smart trader, and trader B is a high risk trader. Apologies, the next time I want to do a video like this, I will try and do the illustration in the board, so forgive me for now. Now, trader A, both of them have the same capital, which is let's say $500 as their capital. Now, trader A is risking 20% of the account size to trade. After, let's say, 2-3 losses, trader B has already lost 60% of that account. And the truth is this: losses, the way our mind is being programmed, or our brain is being programmed, we don't want to entertain losses. The moment the losses hit you, that account will be difficult to revive. Psychologically, it sends a signal. So when the account is when there is a loss in the account of over 60%, sometimes it becomes difficult to build that account back. And the next thing is to blow that account. Now, trader A is a smart trader, and he is trading with a small lot size, risking 1% of the account size. Now, let's say that trader A sustained 3 consecutive losses. The account is still intact. He only lost 3% of the account. That is the point I want to make there. Only 3%. Because he was risking only 1% of the account per trade. But trader B, being a high risk trader, was risking 20% of the account size per trade. So three losses in that account will almost blow that account. But 3 losses from the side of trader A, nothing really, is almost insignificant because it's just 3%. So what am I trying to say, or the point I'm trying to bring out in this is this: trader A still has 97% of the account intact, while trader B have 40% of the account intact. Psychologically, sometimes trader B, look at what happens now. Trader B will want to revenge the market. There is a signal that was sent. He will be tired. He will not focus. A lot of things will happen within that period that he lost 60% of that account. This is the reality. And I am speaking this from experience, personal experience, not what somebody taught me anywhere. So without your small account, risk only 1% of your account per trade. Focus more on the risk to reward, not on the lot size. Small accounts find it difficult to survive multiple losses. Over leverage. Once you lose 50% or more of your account, the chances of recovering will drop significantly. That's why I say you see a lot of people. Once over 50% of that account is lost, the account is gone. As a beginner, as someone that is struggling, or someone that wants to grow the account, this is what you should do. Instead of focusing on making money fast, because that is the reason people go for that big lot size. Instead of focusing on making money fast, focus on making smart trades with high risk to reward. Let's say risk to reward. You'll be targeting, if you risk 1% of your account in each of the trade, then you target risk to reward of 1:5. If you get a quality trade with the risk to reward of 1:5, what this simply means is that if the trade goes in your favor, you are making 5 times profit. If you can do this and stay consistent in the trading, you will begin to see your account compound. It will start going like this. Your account will start compounding because of what? You are consistent. Let's say that you are making $50 every day. If you make $50 by 5 days, that is $250. Now add it to the original to your capital. You see that the money is growing. Why is it growing? Because you were consistent on daily basis, not because you used big lot size. When your risk is consistent, it means that your upside will be higher than your downside. That what it means is that the winning side is greater or will be greater than the losing side. If it is to lose, sure, you will lose. But you should understand that that is part of the game. I want you to stop feeding that your account overnight and start focusing on consistency. It will help you grow steadily while avoiding drawdown. People who trade funded accounts will understand what I mean by drawdown. Why avoiding drawdown? It's not by lot size that grows account. You don't grow account with lot size. You grow small accounts with consistency, consistent win. Keep winning. Win, win, win. That is what compounds the account, and the account will keep growing. Professional traders understand and knows that trading is a long-term game. A small account won't grow overnight, but it will grow if you stick to smart risk management. So instead of thinking about how much you can make, think about how much you can protect. Protecting your capital is the key in this industry, and that is what will make you last long. Your goal shouldn't be to flip accounts. I've seen a lot of traders, they say, I want to flip this account from this to this. Your goal shouldn't be, I want to flip account or to flip account. Your goal should be surviving long enough to compound your profit. So protect your capital first. Profit will follow. If you learn how to protect your capital, that profit that you are looking for will start following you. Strategy number 3, use smart leverage, not maximum leverage. Now, when you advance your leverage, small move will just blow that account. When you have a small account, you need to be careful in all of this. You see lot size, you need to be careful with it. You see leverage, you need to be careful with it. You need to be very careful because you cannot manage a big account if you are not able to manage a small account. So stop using maximum leverage. Use smart leverage that will be beneficial and more healthier in that your account size. High leverage won't give your trade breathing room. When you use less leverage, it will give your account breathing room. Not every slight move will blow that account. Higher leverage is equal to more loss. Trade smaller lot size, maybe 0.01 or 0.05 in each of your trades, depending on your account size. If you trade with small lot size, this is what happens. You will trade without stress. You won't panic in that trading, and blowing accounts will be difficult. These things is what happens when you trade with small accounts. As a trader, let leverage be a tool for you, not a gambling mechanism. Only the right leverage will let you stay in this game long enough to actually make more money. You see, trading will give you that house, that whatever life that you want, but you need to stay long enough in the industry. And for you to stay long enough in the industry, you need to be patient. Strategy number 4, scaling with one strategy. If you keep switching strategy, you will keep struggling in this industry. When I was starting, They say it's trend line, we jump. Demand and supply, we jump. Swing trade, we jump. Anyone that we heard, we jump. But along the line, I discovered that because I keep changing strategies, I wasn't making profit. Instead, I lose. Because of what? If you keep switching strategy, you don't give a particular strategy room enough, or yourself room enough, to know how that strategy works, to know what works there and what doesn't work, to backtest it and even journalize it to know how it works. It is not the strategy that is the problem. You are the problem. So to grow that your small account, or to come out of struggling as a trader, pick one strategy, sit down, analyze, backtest that strategy. Don't wait for another person to backtest it yourself with old history, with what has happened in the trade, to see what works and what doesn't work. Journalize your trade. It will help you a lot. But when you backtest, when you look at the strategy, you backtest it, that is when you know whether that strategy is working or it is not working. That is when you will give the strategy room enough to know and allow the strategy to act the way it's supposed to. No strategy is wrong. All of them are good. And the people using them are profitable. So you pick one strategy, learn it, master it, so that it will produce the profit for you. When you are learning about this strategy, focus your time, energy, and attention on making that strategy better so that it will work for you. When you apply this, you will definitely see a better shift in your trading career. Instead of trading with doubt, replace that doubt with confidence. Instead of trading with emotions, replace that emotions with a proven strategy. Because this strategy, you have tested it, you have looked at it and see how it is. So instead of allowing emotion to come to play, tell yourself, this strategy works. You will keep being a beginner if you keep changing strategies. But if you pick a particular strategy and learn that strategy and master it, you keep becoming better. That is how all these professional traders you see today, that is how they become pro in the industry. Strategy number 5, more capital, more profit. Initially, I used to think that grinding is the way up. What I mean by grinding is picking a small account, trading that account for the account to grow big. That is what makes me money. But in reality, the people that are making money in this industry, they are people that are trading big accounts. When you are trading, what happens when you are trading big accounts is that you will trade with less risk. For someone trading small accounts, one bad trade, sometimes the account won't survive it. One bad trade will send you back to square one. One bad trade will reduce that account. But for someone that is trading big accounts, one bad trade doesn't shake that account. So these are the benefits of trading big accounts. What you need is more capital in this industry. The traders who make more profit in this industry aren't the ones that are flipping $500 accounts into $5,000 accounts. They are the ones trading $50,000 accounts or even more with low risk. Instead of continuing gambling with a small account, take a different turn. Go for prop firm accounts if you see any genuine one. Pass the challenge and get funded with a bigger account. And the rest will be history. So these are the 5 strategies I want you to apply to grow that your account and become profitable, stay profitable in this industry and last for a long time. Number 1, take quality trades, not quantity. If you have been taking quantity, stop. Start taking A+ setup, quality trades. 2, focus on the risk to reward, not lot size. Because the account is small shift when you use big lot size blows that account. 3, use smart leverage, not high or maximum leverage. See leverage as a tool to grow, to use and stay profitable in the industry. 4, maintain one strategy. Study it, digest it, backtest it, and stick to it to become better. And the 5, more capital. If the account is stressing you, you can as well go for a prop firm. Pass their challenge. Let them fund a bigger account for you. If you apply this strategy genuinely and you stay consistent with it, in the next 6 months to 1 year, your trading career will turn around 360 degrees. If this video is helpful, please subscribe, hit the notification bell, and like this video. Drop your comments in the comment section, the challenges you're having as a trader, or any topic that is affecting you or you want me to make video on. Drop it in the comment section. I'll be glad to attend to it. I come your way next time. Bye.